All right. Good afternoon to most of you. Great to have you aboard. Uh, we're going to go out and get into our first trade. Those of you who are new probably haven't heard me talk about this trade. Those of you who've been here for a little bit, you know that I've talked about this several times. As far as candidates that we went through, Johnson and Johnson's fantastic. Looks like some of you went and bought some J&J. The setup here is fantastic. The December options on it are priced very well. Just as a ride with the 7-day moving average. You guys know me. I tend to have a little more of a bearish bias, so I spend a lot of time. Hey, do I make Tesla my first trade to the downside? If I had some nice gains, I'd be much more willing to go after Tesla puts. But at this point, the gap risk is too much. Not really, not tremendously enamored there. Priced out Honeywell. I like Honeywell to the upside. It's gotten a little bit of pullback here today, as they're probably going to pin it around 88 for the expiration here, or right kind of in the middle there, but not giving giving a little bit of pullback here today. I look at Honeywell and I start going into the hourly chart, and I say, you know what, for Honeywell to come back to 87 and a half, 88 is probable and likely. Honeywell would be a great one to buy on a Monday morning dip, and so not going to go with Honeywell. The stock I'm going to go with is Marathon, MRO. And we watched earnings on Marathon last week, and were fantastic. Marathon's been consolidating around this 36, and we had talked, hey, as this thing continues to hold 36, it's very bullish. It had a very nice reversal on Wednesday, push up above the 7-day moving average, triggering a bull vibe signal yesterday. Today's action, whoop-de-doo. I'm not basing this trade on today's action being expiration here. So today's action doesn't mean very much to me. One thing here, there's not a whole lot of volume recently. That's not that big of a deal considering the volume that came in just a little while ago, about a week and a half ago, and this shows all signs of breaking and pushing back up here into the 38 to 39 area. The best thing about this trade is the risk reward, right? I mean, if we start to break back below the 7-day moving average, all right, it's not ready to go. So I'll be able to pull this off with a very, very small loss, barring any major gap, if it were to start to break below the 7 there. So I'm going to go out and get into some MRO calls, and I'm looking at this December 35 strike. And looking at 10 contracts. I normally put about $2,000 into the first trade. 10 contracts, putting about 18.5 in here. I'm going to go see if I can fill this at $1.85 on here. And if it doesn't fill right away, I'll just go market order it. You guys can, those that want to haggle over the price can. Let's just go pop a market order in there, and we see a fill of $1.86. $1.86 on 10 contracts here on MRO. Okay, so we bought MRO calls. Okay, we bought MRO calls. Okay, the December 35 strike. Okay, the December 35 strike for $1.86. Okay, bought MRO calls, the December 35 strike for $1.86. 10 contracts for the new challenge. Okay. Look, and when I price these MROs, anything between $1.80 and $1.92, the risk reward sets up very well. Anywhere in that area. Okay, so it's not, a penny or two here or there, up and down, very, very insignificant here for MRO. Okay, so we're in MRO here, $1.86, 10 contracts. Okay, our stop, we're going to look to get out, and again, this is a mental stop. We're not programming a stop here. but we break down below that 7-day moving average here, 36.21 area. So we're about 45, 50 cents away as far as a stop. So we're looking about 33%, somewhere around 30 to 33% risk on this trade. Okay, depending on the IVs and the time. One of the things that and I bounce back and forth between J&J and MRO, and Carl and I were looking at this, and John, and as we bounce back and forth, the one reason I went with MRO instead of J&J is the overall hourly action here on MRO. Okay, the overall hourly breaking into a new high just has breakout potential written all over it. Okay. Okay, the emails and the text have gone out. Okay, let me copy this here. Let me copy my chat so I can keep putting it in here. For those of you, Carl, if you're there, would you please put that into the message center? There we go. Okay. Okay, the December 35 strike for $1.86, 10 contracts. 10 contracts. December 35 strike, $1.86, 10 contracts. Okay. The target on MRO, okay, and one of the difficult things about something like MRO is putting an absolute target. A lot of these types of stocks that make this little bowl formation, this little cupping formation here, okay, it's a very bullish formation that typically has increased volume near the end of it, followed by a rebound there, okay, or excuse me, a breakout there. But from just a simple technical standpoint, these type of formations, you take the bottom, $34, you take the top, about $36, and you're talking about $2, a little bit more than $2 here. That's what you would expect the breakout. Now, that's very elementary technical analysis as far as a very crude price target. To see that break up into the 38, 39 area is what we're looking for. What I'd love to see is what I'm looking to do is just ride it with the 7-day moving average. As long as it stays above wherever it gets, we start to see any kind of reversals happen in the 38, 39 area. We'll look to pull it off, but kind of targeting that area. If you look at MRO, you even kind of zoom it out a little bit, pull it into kind of a weekly chart. Okay, that if I'm playing on the bullish side, I like to be on the top side of the 7-week moving average as well. Okay, from a weekly standpoint, we have some very strong indicators and some really nice breakout potential. Okay, one of the things that I know I will be asked, so I'll talk about it right now, is this area here in July, and I'm zooming in here on the chart on MRO. Okay, and these tops here in July. So MRO went and hit over 37, and then it hit 37 again. And I'll be asked, is that resistance? Is that a resistance point here for MRO? Okay, well, take a look at the volume during that time. Okay, a lot of times these resistance points are marked by heavy volume or some sort of event, an earnings event or something that created some increased volume. Well, there's not. Okay, there's no increased volume. Why did it drop here in August? It dropped on earnings. Okay, and then it's rallied here on earnings. Most recently, and the earnings report was really nice. Okay, and so overall here, that's not really a strong resistance area in general. So I'm not expecting anything from that action. Okay, as far as a range to buy here, and it's going up. MRO is going up, but this isn't because we're getting into MRO. This is because the market itself is going up. Okay, this isn't just slippage from getting into the option. The market itself is rallying here, and that's going to drive it up. Anywhere between about $1.80 and $1.95 is pretty darn good here from a risk reward standpoint here for MRO. Okay, anything in that area is set up very well. Okay, so dollar, dollar nine, or excuse me, $1.80 to $1.95. I know that's a big range, but we're talking about long options here, long calls. They're going to move 10%, $10 or things like that, very quickly. Okay. The stop here, okay, that we're looking to use is the 7-day moving average. We continue to close above the 7. We'll continue to ride it higher. Yeah, you're correct, 1T. Yeah, you're correct. MRO goes ex divvy on 11:18. A lot of times I don't like to get into the trade when it's going to do that. Okay, don't think it's a big deal here. Yeah, so the stop point we'll look to get out if it starts to move below the 7-day moving average, and if it does do that, we will we'll look to get out. Uh, in this one, I'd like to see it close below the 7-day moving average, being our first challenge trade, not wanting to take a ton of risk. We start the weekend Monday and push below the 7 or Tuesday. I'll look to pop it off. Okay. No, good point, Martin. Yeah, the dividend's not very much. It will be a fractional. It will be a fractional effect, but it will be pretty. It's not a huge effect here. Nothing that I think is such a big effect that it erodes the trade or hurts the trades. Hey, TMT. Yeah, no, I mean, look, in anything with trading, and some of you have been on with me for other challenges. Some of you have been on, there are some of you that just been on the last challenge that really didn't work. But some of you have been on some of those other challenges, and you see, it doesn't take very many good trades to really do very well. So, we'll see. We'll see. Been through the upside before. Never want to promise it, but I'm sure looking forward to it. Yeah, Tom, really good question. So the next trade will be to exit this position. Not necessarily, not necessarily, and we have about a little over $1,100 in cash left. Okay, and so what will I have room to get into another position? I would love to get into Tesla puts. I would love to. I can't do it today. But come Monday, Tesla, or if something with Honeywell, we start to see Honeywell break above yesterday's highs, I would love to put the rest of that to work on some Honeywell calls. I kind of hope I can get into another trade before exiting Marathon, because I'd like to be in Marathon for about a week, and give it that kind of 5-6 day breakout type of action. And in the meantime, if that happens, we'll probably have some trades here for Honeywell. Look, and I know a lot of people are worried about some of the slippage here in the volume that kind of comes in, right, and into these trades. But I look back to even some of my fund managing days and something like this where we get into 3,000, 4,000, 5,000 contracts. Um, it's not much different. Honeywell, or excuse me, MRO isn't the most liquid out there. I mean, it's not quite as liquid as Disney or something like that, but it's got plenty of liquidity to support us trading it. Okay. Yeah, Enrique, are most of the trades going to be in the last hour of trading? Yeah, you'll find that. Probably 75 to 80% will be. Okay. The expiration date on the trade, December. Okay, so it's the December monthlies. So the December monthlies will expire the third Friday of December. Okay, so on December 20th. Okay, on December 20th. Now, if we're still in this by December 20th, shoot me. We have no intention of holding it till December. Yeah, depending on your broker, it may say December 21st. Okay. Yeah, as far as the trade here, Jay. Yeah, 180 to 195 is the range. Okay. MRO has moved up as the market has moved up. I didn't expect the market to really move up until about the last half hour. You may get 186. You're not listening to me. You're on just on chat, but you may get 186 there. As far as trusting any fresh signals here today, please don't. Please don't. If you're going to go enter new trades, base them on the signals that have come in yesterday, the day before. Today's option expiration. There's a variety of things that can happen here, and so don't base it just on today's action. Okay, Marathon was one of those, and I've been talking about it. That I've been drooling over getting. It's been top on one of the tops on my list, along with Tesoro. Tesoro's run away. I need a little pullback on Tesoro to get into that. Marathon's been really kind of stayed flat with us. Marathon would have been the trade I would have gotten into yesterday if we started the challenge yesterday. So popping into it here. No, I mean, look, if you're being obstinate about the price, is there any problem with waiting till Monday? No, I mean, look, will it matter more when we're trading with 40, 50, 60,000 and we put 20 grand into a trade? Yeah. 5 cents is going to matter a lot more, right? I mean, 5 cents is going to make $1,000 difference. For here, though, we're talking 20, 30, $40, which, yes, is dinner money or whatever, but it's not, in the scheme of the trade, it's not going to make or break the trade. It's not going to make or break, the challenge itself there. You saw me go just pile into it with a market order. Why? Just to get into it because the 3-4 cents doesn't matter. Just doesn't matter. Okay. Notice though the option price is higher than where we got in. Why? Because the stock price is up. This isn't like the option price is rising without the stock price going up. The stock price is ticking up, and that correlates directly to the market itself ticking up. So we're not talking about something that's reacting to our entry and now going up because we entered. It's going up because the market itself is moving up slightly, the stock moving up, and the options are going to follow suit there. Okay. Yeah, Darren, S&P hit 1800. Not quite sure. Oh, you're rooting for it. Okay. Yeah, we're a few points away. Now, we're close enough now. It's going to be tough to imagine Monday at some time someone doesn't print an 18. The 17, 16, 15, 18, 19, those major numbers, they don't matter in the long term. In the short term, the first time they're going to go get hit, yeah, they do. You see some action around it. But it was like 1700. You pop up to 1700, play around with it. The next times we go through it, nobody cares. So, first time up here at 18, it matters a little bit. Okay? Yeah, John 1200, rooting for 1200. Back in my fund managing days, my brother John, who's been on chat here, we managed the money together, and we would laugh because through 2000, late 2009 to something like early 2012, it seemed like, or late 2011, it seemed like the market always went to 1104. And when it was above 1104, eventually it came back, and we'd always look at each other, and it was at that level. So we still look at each other and say we'll be at 1104, but it's got a long way to go to get there, doesn't it? It's not going to make it there anytime soon. Um, Jay, yeah, good question here. With MRO, um, it doesn't typically end at its highs. With MRO, but it's not unheard of. Vern, great question. Do we ever try to go into a trade a week or two before earnings, looking for the implied volatility to rise and take the premium with it? Yes, absolutely. One of my favorite times is into those earnings. I don't like to hold it over earnings, but yes, taking advantage of that IV rise. Dan. Uh, Alrighty. We're about a half hour into the market close here. Okay. Market is trying to flirt with 1800 on the S&P. Got a few points to go to get there. Could it happen? Sure. It sure could. We are now in MRO. Okay, we are now in MRO calls. Okay, we are in the December. Okay, the December 35 calls here on MRO. Okay, and 10 contracts here for our first trade. Okay. Let me go take a look at a couple other things here with you that people have asked me to look at. Let's talk about Fannie Mae. Dan, if you're out there, I know you're riding high with this. Fannie Mae here continues to march higher. There's nothing really to stop it. There's a lot of positive news building here with Fannie Mae. To see Fannie Mae push up above $5-6 simply from a trade dynamic standpoint is on the table there. Absolutely on the table. Okay. So Fannie Mae continues to be bullish. It's not something I'd be pulling out of. And Dan, as far as your go that you're riding high here, the gap down here today, it's held up pretty well. This isn't entirely uncommon to see with a stock like this. But the dangers here. You're talking about something tremendously overbought. It's gone from 17 to 30. To ride it and continue pushing it up here, can become very dangerous. Okay. Yeah, Fannie Mae is FNMA. FNMA. Okay. Home builders, Lennar. Okay. I would love to short Lennar here. I don't have enough to confirm it. And to see this go into the 35, 36 area, it could happen there. When you look at Lennar, if you kind of take it from an hourly perspective, to see it come up into 35, 35 and a half, shorting it there would make a little more sense than right here for those of you that want that there. Okay. Lowe's. Okay. Lowe's and Home Depot will be reporting earnings next week. Okay. Lowe's here has kind of done what it's been doing all year. It makes this shot up into the upper band. then weakens, shoots up into the upper band, and then weakens. It's now shot up into the upper band, is now weakening. It's not a stock that I would feel comfortable shorting here, especially ahead of the earnings next week. You may not get that same type of reaction. We talked about bottom picking with Home Depot back here around 75. Home Depot's been surging ahead of their earnings. I expect the earnings to be really strong for Home Depot, based on some of the things that we've seen out of Costco and some of the other retailers. And I know Home Depot's a little different story, but this is a very nice move ahead of earnings here. Disney. Okay, Disney. There's nothing bearish here, but to see it stall here at 70 isn't that big of a deal. Okay, isn't that big of a deal. Love to see it come back to 69 and give us an entry around there. Okay, don't know that we'll get that, but that's what I'd love to see. Yeah, Dan, why negative feelings on Tesla? Um, as far as feelings go, I don't have anything against Tesla. Actually, really like their cars. Tried to talk my wife into letting me buy one. Um, and long term, I think Tesla has a lot of potential and a lot of great things. But it was only a month ago where Elon Musk, the CEO, came out and even said his own stock was overvalued. He called it overvalued. We saw this big gap down here. There's accounting irregularities that are being tossed about, and those aren't necessarily bearish, but this is more of a dynamic of the trade and not so much anything against Tesla. Okay, take Netflix. Okay, take Netflix. And let me just pull up a monthly chart so we can see back here. Netflix here, 09, 010, 011, big run, all the way up into the 300s, upper 200s. And then once it starts to fall, we go from 300 down to, 75? Pop back up to 120, back down near the 50 area, and it's now marching higher. Tesla's a relatively new stock. It's going to be very volatile over time. It's going to overreact to the upside and the downside. When you have Bank of America that has a higher book value than Tesla, and Bank of America is trading around 14, 15, and Tesla is trading, almost hit 200 earlier, you're talking about something that is a trend stock. People are piling into it. It's a chaser. It's one of those that just, hey, it keeps going up. You tell your buddy's piling in. Hedge funds are piling in. But once that stops, once it starts to turn and go the other way, that whole mentality says, okay, we're going to go the other way. And just as much as the jubilation and the exuberance comes in to push it high, from 80 to 200, which is a complete overreaction to the upside, you tend to get that once it starts to slide. Where, Tesla probably doesn't deserve to trade below 80, but to see that thing come down to 80 or even break that as an overreaction would be a common dynamic that we see with some of these high-flying growth stocks. Doesn't have to happen, but it's nothing with Tesla, more the dynamic of the trade there with Tesla. Yeah, Dan, Elon bought puts, that's why. Oh, you rented one in San Fran? Nice. I'll have to do that. And then my wife will let me get one. Maybe after the challenge, right? Did you not say that we will go for 1,000 for our first challenge trade? No, I said typically we will put 2,000 in our first challenge trade, and then we leave 1,000 in cash to potentially get into another one. I did look at Tesla, and I'll show you the options here. Okay, I did look at these December 140 puts on Tesla. And I thought, you know what, maybe I just buy one of these for the challenge and then wait to buy calls on Honeywell or Johnson & Johnson or Marathon on Monday. That did go through my head, but did it the other way. So let's go after Marathon here, and then we'll look at Tesla on Monday or some of the others here. My take on the Dow, I think these markets are they're not overvalued. Okay, we can't make too much of a fundamental argument on valuations in a traditional sense. There's earnings growth to support some of this move. Whether you say some of the earnings growth is artificial because of some of the Fed action, well, that's a whole nother argument. The move here in the market is to me toppy, but there's nothing saying it's going down yet. In fact, every little head fake to the downside continues to be blown apart, and that's typical of a market that's set to melt up. Are we in a melt up situation? And heck, markets melted up in '99. When we watch Yahoo go from 40 bucks up to 110 on a melt up. We saw some melt up in October of 2007, October 2007. We've seen melt up periods before, and that's what this looks like overall. Could it be different? Sure. Will I be very anxious and eager to buy puts on on the next signs of cracking? Absolutely. T-Mobile. T-Mobile here, they issued more stock earlier and caused it to go down. Huge, wow, huge probably isn't the right word for the volume on that here today. Give me 1 second. I have not gone through all the news on T-Mobile today. From a candle perspective and a volume and a reversal perspective, I can see why somebody would want to get in. Secondary was priced at 25, so all that volume's coming in around that area. Look, I can see why someone would want to trade it higher. I wouldn't, as it's still trading below the 7. I would hesitate to get in there. If it starts to maybe Monday gap up above the 7, it's probably a chaseable gap. But you're talking about an event. They're diluting their shares here around 25. Fundamentally, there's a lot of good things going on with T-Mobile, but when I look at it, I just say I don't really see anything that I would be eager to jump into. I can see why somebody would, and if you're doing it, if you want to jump into T-Mobile, you're using today's bullish engulfing candle, and you're buying in using today's low as a stopping point there. Okay. When we talked, we normally put 2,000 into the first trade. I put a little bit less this time, and that way, if it doesn't work, we have about a 30% loss. We still have 2,000 to put in the next trade. Okay, but now I have about 1,000 to go out. Again, those are that's kind of the normal, and so I'm doing kind of the normal here. Okay. Yeah, Holly, you're looking at MRO, and if it can break above 38, it could run to 43. Yeah, the fundamentals would support it to 43 too. They'd actually support it to 45 to 46, depending on some other factors. But that's kind of a ways away. Don't expect to ride it, all the way up to that point. If it went there on Monday, I wouldn't complain. I really wouldn't complain there. Okay. David SoCal. The transports. If you look at the Dow Transport Index, continues to push into new highs. We talked about Dow theory a little bit earlier this week. We have transports, industrials breaking into new highs together. That's generally a recipe of continued bullishness. Some of the rails are fantastic looking charts here. We talked about UNP earlier this week. Just a fantastic looking bullish chart. CSX as well, as far as overall, with CSX here. Oops, wrong screen. Let me zoom this in. With CSX, you have this little cupping pattern here. For those of you that like chart patterns, you have this little handle pattern here. So you have a very nice cup and handle action, little consolidation, trying to break out. You start to see a CSX trade above 27 into next week. That's extremely bullish for these transports. And then even if you go into some of the trucks, the Ryder Systems, JB Hunts of the world, just some really bullish action. As far as JB Hunt goes, from just a technical standpoint, the reversal that it had on the news earlier this month, and now popping up here, you're probably going to see JB Hunt go higher. I don't like to pile into something like JB Hunt here simply because it's making its bullish move here on a options expiration Friday. So you always wonder, do I trust it? But overall, transports they're hot right here. I wouldn't necessarily pile into something like FedEx. FedEx here today, basically from the 13F filings, we learned that there were three kind of these billionaire investors that were piling into FedEx. Well, that's why FedEx has gone from 110 to 135. Now that it's released, is there a potential for a pullback? Yeah, I think so. Does it have to happen? No. Would I short FedEx here? No. No. But overall, these transport stocks, the charts on them are fantastic. They're fantastic. Yeah, TMT. Could I talk about Chipotle Mexican Grill as a short? Yeah, I wouldn't short it. When you're talking about bullish stories out there in the marketplace, and a stock that has the earnings and the growth to support the major move that it's made, a lot of times I see a stock up this much, I'm anxious to go short it. I'm anxious to play the pullback. But when you look at Chipotle's earnings, you look at what's going on there. Yes, there are some bearish arguments, but there's a lot of bullishness here to support it. If I'm looking at it from a bearish perspective, this is the entry, and I'm looking for a pullback back towards about 510. What would make me say, well, maybe I have some bearishness here? Well, this last little recent rally, as the market itself has been going up, very light volume here. Is this just a little bit of exhaustion here? Do we kind of see this collapse on itself, get back into the 510, some of the earnings highs? I think that's kind of your best case scenario. But if you're looking to short Chipotle, right, 550 area looks like a good short area. But if you're taking a bearish stance on Chipotle, so does 560, so does 570, so does 580. So there's really not a stop point. Okay, there's really not a stop point here for Chipotle on a short standpoint. So if you're going to go after it short, I would simply just put what you're willing to lose on it from an option standpoint and run with it. That way you don't have to worry about a stop. That way if it does go to 580 first and then drops down to 510, you're okay. But you don't have to worry about stopping out, letting it tick another little bit higher, and then moving the other way on you. Okay. Thanks, Jay Wood. All right, good. I hope I'm saying that right. Do I ever take off a partial position and let some ride, Tom? Yeah, not very often, but yes, I do. Trade Hound, you're going to buy a Tesla at 100K? All right, sounds good. Wives are smart. Yeah, absolutely. Keep you grounded. Yeah, what about Twitter stock? Where's their revenue and why are they trading so high? Look, the whole argument around Twitter is what's the market cap? And it's not a matter of today's revenue. It's not a matter of tomorrow's revenue. It's a matter of what's the revenue 10 years from now. And when some IPOs like Twitter, that's kind of the mentality. Look, Twitter, they're not going to let it pull a Facebook. The underwriters can't let that happen, and so they're going to keep it up. They're going to keep it. They're going to keep it relatively stable to higher for a little while. When they stop that, when they finally say, "Okay, Twitter, you're on your own," after 2, 3, maybe even 4 weeks, I think you can expect a significant decline in Twitter. But I wouldn't expect it right here, right now. Hey Vaughn, thank you for your suggestion there. I forwarding that off to my team. Thank you. Yeah, Joe, MRO traded up to 97, is back down to 190. 190, 191. If you look at it here, so is the market. The market's pulled back. So MRO is pulled back. I just don't want you to look at this as if, we had anything to do with it moving higher. Yeah, maybe we had a 1 or 2 penny slippage there, but MRO has been, the stock price has been directly moving with the market, and the option price have been directly moving with the stock. Okay. Yeah, anywhere between a buck 80, buck 95. Pretty good on MRO. Does it sell off a little bit into the close? It is options expiration Friday. We've seen very weird things happen during this time. So I wouldn't. There's nothing that I would look at MRO and say, oh, you know what? That's odd or that's weird. I guess maybe if it dropped to 36.50 or below. Do you have to wait for a $1.86 price or buy a $1.86 or better, KM? You know what? You can do whatever you want. You don't have to make the trade. You can wait for a buck 86, and if you get it, great. You can wait for a buck 60 and say, you know what, Jeff got it in a little higher price. I think I can get it in a buck 60. I'll leave that up to you. Basically just showing you what we're doing. Okay, just showing you what we're doing. And then depending on, what you're comfortable with, just do what you're comfortable with. Okay. How do you add the 7-day moving average on the TOS graph? Let's see here. Obviously I don't use these Thinkorswim charts very much. I just basically bring them up for a 1-minute chart on futures or, in this case, marathon. But I believe it's studies here. Add a study, and it should be something like moving averages, and then down to a daily simple SMA. And that didn't work, so I'm showing my ignorance with these charts. Oh, that's because I'm on the minute chart. So if I back out here to a daily chart, yeah, it's throwing a 7-day moving average on there. Okay. Then you can go in, you can smooth it, or that's not a 7. Sorry, it's a 9-day moving average that it's putting on there. Okay. I'm not an expert on putting those on. I can have somebody better show that to you next week, or whatever broker you're using. Just go into some of their training videos for the broker, and they can set it up there for you. Okay. Or our expert Thinkorswim chartist Darren can help you out there. Thanks, Darren. Appreciate it. Yeah, KM Yelp. You know me. I want to get short Yelp. I want to get short Yelp. Just don't have that chance. It continuing to go up. Volumes are relatively light. They're going to go and they're pushing above 70 here today. So at this point, I don't really have a trade thesis. We had every single breakdown type action happening, but what does this now turn into? It turns into a bear trap, and as it continues to mount a little higher here, I don't have anything yet. I need something else if I really want to get short. Okay, Apple. Yeah, what's my take on Apple? I think Apple goes higher. I don't think today's action means a whole lot with expiration. Bands are contracting, and so that's always a little bit of a danger as far as it's going to consolidate a little bit more. Um, I have in my personal account a little bit of Apple calls. I'm still in them. With using the 520 mark. Would I love to add this for the challenge? Did I go price them for the challenge? I did. But I said to myself, if next week we pierce the upper band, I have a no-brainer. Okay, I have a no-brainer. One of the things, a friend of mine, who some of you know, Micah, he taught me about some of the seasonality in regards to Apple, and how from a seasonal standpoint, this isn't the best time for Apple, but and that kind of gets me a little bit. Okay, I need a better signal. Need a better signal. Okay. Yeah, Robert. In the context of today, MRO began outperforming the market an hour ago. Yeah, it did. It did. Don't know that that really means anything, but it did. Okay. I am living in the past, absolutely. In fact, as I'm saying this, I'm trying to get through these chats. I'm chugging through them. I'm chugging through them. Good question, Enrique. Why do I prefer to use the 7 day moving average? What's magical about the 7 day moving average? Nothing. Nothing is magical about it. Back in my fund managing days, and even before that, I played around with a 9 day exponential, a 7 day exponential, 7 day normal moving average, or simple moving average. Played around with 3 days. The seven to me on the basis of a 7 day simple moving average gave fewer whipsaws overall and a better way to follow the trend. Um, is it perfect? No, but it's just what I found to be the most effective for me. Yeah, JC. Would I take a look at Protolabs? Yeah, PRLB. Okay, PRLB. Um, just purely from a technical standpoint, it is a little bit toppy. It is a little bit toppy here, but at the same time, there's no real confirmation of a breakdown when you go into the fundamentals here of this type of stock, right? I mean, this is um, one of these 3D printing companies, right? How much do the fundamentals matter? We have such a big growth rate this year. Yeah, that's going to come down a little bit next year, but this is chasing growth, chasing growth. Um, my father-in-law called me up last week and he said, Jeff, Triple D, DDD, I want to buy it. I got an email saying, hey, it looks great, and it's got a similar trend as Proto Labs. And whenever my father-in-law starts bringing one of these stocks to me, I kind of think to myself, they may be a little toppy. It's finally going out to the masses, and maybe they're a little bit toppy. As far as going forward on it, anytime you're in this type of a company, the risk is really high. But with PRLB, I would give it a chance to go up because the trend remains strong as long as it continues to hold 80. As long as it continues to hold 80. Okay. Okay, stop and price target. Okay, let's talk MRO one more time here. MRO. Okay, we're looking in the 38 to 39 area for MRO. Stop wise, if it moves below the 7 day moving average, we'll look to get out. Now, I'm not going to pin myself down as far as if we go below the 7 day moving average in the morning, in the afternoon, or at the close. But if we're looking to close below the 7, I'll definitely get out. If it moves below the 7 on a gap in the morning or something, I may look to hold it through the day. But overall, I'm looking to kind of follow this a little bit with the 7. The 7 on MRO isn't really a great indicator. As you can kind of see, it can kind of chop up and down and around the 7. But if MRO is ready to go on a nice trend on that breakout move up, it'll follow the 7 very nicely. Okay. Alrighty. Well, market set to close here. I appreciate everyone hopping on. Great to have you aboard. If you have any questions this weekend, feel free to shoot them over to us, and we will be happy to respond to you, help you out there. If you've had any trouble, please let us know. Look forward to seeing you Monday, and to a great trading challenge here. Thank you, and have yourselves a great weekend. Talk to you later.